Intel has appointed chip industry veteran Lip-Bu Tan as its new CEO effective the 18th of March. Now, the decision comes 3 months after the company ousted Pat Gelsinger amid concerns over its turnaround strategy. Now, Tan, a former board member and longtime tech investor, aims to restore Intel's global standing. The company says, following the announcement, Intel's stock surged 12% in extended trading. Meanwhile, analysts view the move as a stabilizing step, in fact, for the struggling chipmaker, which has lost significant ground to rivals like NVIDIA. Despite challenges, Intel remains committed to its ambitious push into contract chip manufacturing. Oil prices edged lower on Thursday as worries over escalating tariff wars dampened investor sentiment, outweighing the impact of a larger-than-expected draw in U.S. gasoline stocks. Brent crude, meanwhile, slipped to $70.88 per barrel, while U.S. crude futures fell to $67.57 a barrel. The drop follows a brief rally after U.S. data showed tighter-than-expected oil and fuel inventories. Meanwhile, investors remain concerned that trade tensions could slow economic growth, reduce energy demands. Meanwhile, U.S. gasoline and distillate stocks saw significant declines as well, indicating strong domestic consumption despite broader market uncertainty. The tech giant Adobe's shares, in fact, fell more than 4% in extended trading after the company forecast second quarter revenue in line with analyst expectations, but showed slow progress in monetizing its AI tools. While Adobe reaffirmed its annual revenue target, investors are watching for a clearer timeline on artificial intelligence-driven growth. Now, the company has been investing heavily in AI-powered creative tools, but faces increasing competition from startups. CEO Shantanu Narayan remains optimistic about Adobe's position in the evolving digital economy. However, the Wall Street remains cautious amid concerns about AI monetization delays. American Eagle Outfitters has forecast a decline in annual revenue, citing weakening consumer demand and higher costs from President Donald Trump's increased tariffs on Chinese imports. The U.S. retail giant expects a fiscal 2025 revenue to drop in the low single-digit percentage range, below analyst expectations, they say. Meanwhile, shares fell 5% in extended trading. CEO Jay Schottenstein noted a slower-than-expected start to the year, while CFO Michael Matthias estimated a $5 to $10 million tariff-related impact. The latest tariff hike, doubling the levy on Chinese goods to 20%, has raised concerns across the U.S. retail sector. JP Morgan Chase has disclosed a 5.36% stake in mining giant Rio Tinto. Now, this is according to an exchange filing the company made. The investment, held on behalf of clients, highlights continued institutional interest in the resources sector. Rio Tinto, meanwhile, one of the world's largest mining companies, has been a key player in global commodity markets. The disclosure comes as mining stocks, in fact, remain volatile amid shifting demand for raw materials and regulatory changes in key markets like Australia, the land down under, and Canada.